Ethereum price today is $2,735.48, with a 24-hour trading volume of $14 billion. Ethereum is down 5.47% in the last 24 hours. The current CoinMarketCap ranking is 2, with a live market cap of $327 billion. It has a circulating supply of 119 million ETH coins. According to our current Ethereum price prediction, the value of Ethereum will drop by -14.27% and reach $2,362.35 by March 9, 2022. According to our technical indicators, the current sentiment is bearish, while the fear and greed index is showing fear. Ethereum recorded 13.43% green days, with 6.69% price volatility over the last 30 days. Based on our Ethereum forecast, it's now a bad time to buy Ethereum. Based on today's classical pivot point P1, with the value of 2,879.81, Ethereum has support levels of $2,779.17, $2,705.01, and the strongest at $2,604.37. Similarly, Ethereum resistance levels are at $2,953.97, $3,054.61, and $3,128.77. To get a better idea of what could happen to the Ethereum price in the future, it's helpful to also explore Ethereum's price history. In the last month, the ETH USD pair is down -0.15%. The one-year performance of ETH USD is 78.72%. Ethereum price may continue to drop lower, to discover crucial levels of support before moving higher. ETH will face multiple tough hurdles before the token attempts to tag the upper boundary of the governing technical pattern at $3,272. Ethereum price has formed an ascending triangle pattern on the 12-hour chart, suggesting a long-term bullish outlook. However, momentum has shifted to the downside, and ETH may slide lower to test multiple levels of support. The first line of defense is at the 50% retracement level at 2,719, then at the 61.8% Fibonacci retracement level at $2,587. An additional foothold will emerge at the lower boundary of the prevailing chart pattern at $2,398, intersecting with the 78.6% Fibonacci retracement level. Further selling pressure may incentivize the sellers to slice below the downside trend line of the governing technical pattern. The long-term optimistic outlook may be invalidated. However, if buying pressure increases, Ethereum price may face immediate resistance at the 21 12-hour simple moving average SMA at $27.47. Ethereum price will face its toughest challenge at $2,851 next, where the 50 12-hour SMA, 100 12-hour SMA and the 38.2% Fibonacci retracement level intersect. If a spike in buy order occurs, Ethereum price may climb higher toward the 23.6% Fibonacci retracement level at $3,015. An increase in bullish sentiment may push ETH higher toward the resistance line given by the momentum reversal indicator, MRI, at $3,156 before the token tags the upper boundary of the prevailing chart pattern at $3,272. Slicing above the topside trendline of the governing technical pattern will put another 33% climb for Ethereum price on the radar toward $4,372. There is an old saying in traditional markets, which is actually more like a trading rule. It goes, when the trend is negative, one can only be neutral or short, meaning, bet on the price decrease. The problem is that a relief-bound Strix trader into believing that the negative prevailing sentiment has shifted into a buyer's market. For example, after analyzing Ether's price chart, one might conclude that after a 41% crash, a bull run should be ignited sooner rather than later. Unfortunately, this is a bit of a fallacy because markets can exist in periods of non-definition. Thus, you could say that the above chart presents a long period of range trading near 2,800, for example. Considering Ether's 88% annualized volatility, moves between 2,400 and 3,200 should be regarded as normal. Using technical analysis, a trader might point to lower highs forming the above downtrend channel, but should Ether bears celebrate and call for 2,500 and lower? That largely depends on how retail traders are positioned, along with the Ethereum network's on-chain metrics. To understand how confident traders are about Ether's price recovery, one should analyze the perpetual contracts futures data. This is the retail trader's preferred derivative because exchanges offer up to 50x leverage. Its price tends to track the regular spot markets perfectly. In any futures contract trade, longs buyers and short sellers are matched at all times, but their leverage use can vary. Consequently, exchanges will charge a funding rate to whichever side deposited less margin, and this fee is paid to the opposing side. This data tells us whether retail traders are getting excited, causing the funding rate to move above 0.05%, equivalent to 1% per week. Notice how the past couple of months showed a slightly negative funding rate, reflecting a neutral to bearish sentiment. Currently, there is no sign that retail traders are confident enough to buy ETH using leverage. To exclude externalities that might have influenced derivatives data, one should analyze the Ethereum network's on-chain data. For example, monitoring the network use tells us whether actual use cases support the demand for Ether token.